Alright, what's happening, guys? Welcome back to another episode of Sensible Investing. Jesse here, and today we've got a quick little update on the road to building this $150,000 stock portfolio. And as you can tell by the meme of the Star Trek dude over here, look, and the title, mistakes were made, but thankfully I was able to get out with actually a small profit, which was, really good, right? I was really surprised. But look, just wanted to bring this update to you since the last video and show you what I've done. So, as you guys may recall from the last video, I was quite bullish on avocados, and you guys saw the growth figures, right? So my research told me that, based on the channels and the sales trends, the volume trends, and etc., the sales should have been up at least 6 to 15%, right? But unfortunately, Calavo, which was one of my positions that I opened up before the call, they actually missed quite badly, right? They missed both my expectations and the street expectations. And so what happened was I just wanted to take you through the miss, right? Because either two things could have happened. Either, I did my research wrong, or management was flat out lying about their exposure to the food service sector. And so I think that there's a bit of both, right? I think that there's a bit of both, because as you guys can see over here, they've said that it's been a profound impact, right? But if you look at their key customers, like your Kroger's and your Whole Foods and all those other people, they weren't that impacted, right? So unless, Calavo had massive exposure to the food service sector, then that, based on my research, is the only possible way that there could have been an impact, right? But as you can see, I contacted their investor relations guy, and he said, look, retail is the majority of our business, but we do have exposure to food service. Now, having said that, see, this is the gray area, because 51% is still the majority, right? But 51% as the majority and 80%, that's a huge difference, okay? So if somebody has 49% exposure to food service, that's still the minority, but that's still going to be massive damage, right? So what I wanted to take you guys through is just some of the details from the earnings calls, because, this is what confused me, right? They said closure of large restaurant chains and retail food outlets, right? That's what really impacted their revenue. But then if you continued reading through the earnings calls and seeing what management said, there seems to have been some inconsistencies, which is part of the reason which actually drove me to get out, right? So it's either too much exposure to food service, or maybe management's being dishonest, or for some reason, my research just wasn't right, okay? So as you guys can see here, they said that the RFG food service, Renaissance Food Group, they were down 18%, principally due to the closure of the company's co-packing partner in the Midwest, right? So lower consumer demands in the Midwest. And so I'm thinking, well, is it actually COVID, or is it their co-packing partner? Because that's a completely different thing. So as you can see, the consistency there, it's already not there, right? So are we talking, is it the closure of the restaurants? Or, is it because of the disruption of COVID, or is it the closure of their co-packing partner, right? So something is a little bit fishy, and it doesn't make sense, okay? And if you focus on this second part over here, you can say, well, look, the company is withdrawing its guidance, but retail trends are beginning to strengthen, and orders from food service customers are rebounding off crisis lows. But again, based on my research, the trends were already strong from the 22nd of March. It was like exploding. So they should have had 2 months of growth, right? So this is again why I was confused. Because if you look at what Walmart said, Costco said, Whole Foods, Kroger, whoever, they all said that we sold a lot of stuff. And you can say, well, people were buying longer shelf life stuff and not really buying fresh stuff. But again, that doesn't make sense, because they, the numbers that I showed you about the sort of avocado sales trends, it was way up, right? Like 6 to 15% year on year. So again, very, very fishy, and that's exactly why I sold out, okay? And again, if you just have a look at these next paragraphs, and I've highlighted for you in yellow so that you can just sort of jump straight to what's important, you can actually see, I think it's a problem with their co-packing partner, right? So I think somewhere along the supply chain, they've had a relationship turn sour. And as a result, that's why they were not able to service their customers in that specific region, which is actually what caused the 19% decline. So really nothing to do with COVID, because the retail avocado sales were very, very, very strong, right? I mean, if there's a shortage of demand and demand is higher and volumes are up, why would there be canceled orders? It doesn't make sense at all. So based on that, guys, what I've done is, as you can see here, I bought before the earnings call as I was expecting a 30% spike. When I saw the results, I was expecting a 30% crash. And thank God it only crashed about 3-4%. So I just sold everything. I got out with a small profit of $170. And look, we're all human. No one's perfect. I thought I did my research, but clearly this was a really, really good lesson. And so, I'm quite happy that I didn't lose any money, but I'm also happy that, it's given me some more insight into really just, really digging into the integrity of management, right? Because, again, he said the majority, right, the investor relations guy, he said the majority is wholesale retail, but it could be 50.5%, and that's still the majority, and technically that wouldn't be misleading. So bit of insight for you. All right, guys, and then final little bit of the update for my portfolio. As you guys can see, the exchange rate is quite good. So what I've actually done is I've added another 6,500 almost USD to my one of my portfolios, and I'll continue to be adding a little bit more money in USD to my USD portfolio through Hatch Invest. Because, like I said, I think the exchange rates are pretty good at the moment, and wouldn't hurt to buy a bit of USD. Again, this is just my opinion. I'm not an FX expert, so seek your own investment advice. But that is a very quick update for you guys. So until the next update, happy investing, and I'll catch you in the next video.